Start looking over here. Okay, so I'm going to go ahead and look at the SPX, and I'm going to go ahead and zoom out. We're going to look at the daily candles first. So the daily candles we're going to see here on the daily candles, we're going to see, okay, we're going to zoom out, and we can kind of see that we've been in this channel, right? In this bullish channel that I've been talking about. I said it last night. I said, guys, be careful because this thing is very bullish. And so we are getting into this green channel right here, which is causing the market to continue higher. In addition to that, we've been scraping the bottom of the channel. Every time we scrape the bottom of the channel, we end up going higher. Now, what I want to point out is that over here, for example, in this area, we ended up going to the bottom of the channel, ended up pushing from there. Now, also notice that we had two arrows here indicating that we're going higher. Let me shut off the active trader so we can get a bigger screen. Actually, you guys don't even see it. So, okay, so we had two arrows, one here that indicated that we're going to push up, and then this was pushing off the 200 moving average, which is this red line right here. So we had this red line right here that the market was going to push from. So what I'm going to do is now I'm going to expand the screen so we can see this a little bit better, and kind of remove the oscillators for now from the screen so we can see better. Bear with me. First I'm trying the live YouTube. So I'm trying to expand this. Yeah. It kind of doesn't let me go further. Okay, I'll do it through here. I think you guys can see. Actually, I did it a little bit. All right, you guys can see it better here. Okay, so what I had here is an arrow here telling me that we're going up higher, and this arrow is being formed by two things. One of them is the awesome oscillator that was red under the lip. This line right here is the lip line. So once you turn down below the lip line, you had red bars that eventually turned green here. Arrow told you that we were going to start turning. Then this was followed by the oscillator, McClellan oscillator, that confirmed the push. As you can see, it started moving upwards along with the bars, and at the same time we had a push and a change of direction at the awesome oscillator. You should also see the stochastics cross here. So this arrow told you that we were going to go higher, and it was correct. So this is when we call the bottom. So now what we want to focus on is what's going to happen here. Where is the market going, right? We know that a pullback is coming. We know that we are extremes, and we are looking for that. Market is pretty extended and almost ready to take a breather. So a few things that we got to look at, for example, are things like Walmart. So Walmart is something to pay attention to. As you can see here, we had a significant drop. They're giving us a poor guidance in the future, and this is causing pressure in this kind of stock. And this is the people's stock, right? This is the stock that has been pushing for a good amount of time. For the whole year, it's kind of staying alive pretty good. Look, for the past few months, we've been climbing upwards, and so all of a sudden you have a drop after hitting a new high. So that's one thing. The other thing is that we got to pay attention to is that mutual funds distributions happen from now until, they usually happen in the first 2 weeks of December, but it's about 25% of those companies, and they do capital gains, dividends, and interest. So this usually happens first 2 weeks of December, and every time we see this, we're gonna see a small pullback in the markets. Now, the market is also known for being choppy from here all the way to Thanksgiving. So usually you wanna start getting out of positions, and you want to go back in the market when we are after, post Thanksgiving. So that's one thing that you want to keep in mind. Now, markets have not been, trading the way they're supposed to. As we can say that we had a crazy rally all the way from October, and we continued to push higher and higher and higher, and no one cared, right? We continue to go higher. So what I want to point out is the fact that we had I'm going to go to daily candles here. Daily candles, I'm in the NASDAQ. As you can see, look, that yellow line right here, this yellow line right here, is the high from the NASDAQ at 1593205. And to be honest, we are very close to making a new high in the NASDAQ. And so why not? We are not even at extended situation. Look, awesome oscillator over here at 690. If I extend this, if I make a line right here and I extend it to the left, we are not even at extremes. We've been at other extremes before. So if I grab this bar and I extend it to the left, left extension, and I go that way, I can see that we've been at other extremes before, and it is possible that we continue to push just a little bit higher, just a little bit higher. We've been there before. So why can we make it during this occasion? We most definitely can do it. Also, I want to point out that the 20 and the 40 just crossed here. 2040 just crossed just recently on the 10th of November. We had a 2040 cross, which is the 20 is this dash red line, and the 40 is the green dash line, right? So there is a possibility that we continue to go higher. How much higher? It looks like the spike can reach 458 or so, and if that's the case, then you're gonna see new highs on the Nasdaq as well. Now, that being said, the market can also reverse maybe tomorrow towards the end of the day after pushing, or God knows, right? They could definitely do that. Now, I know that there's 15 million in puts that expire tomorrow at 448. So I don't think that the market maker is going to go down there. I don't think that's going to happen anytime soon. I'm going to now put here the SPX, and I want to show you where we are exactly. So the SPX, if I grab this being the bottom, and I'm going to do a Fibonacci retracement, and I'm going to grab this as being the top, and I put it right there. I'm going to go ahead and reverse it. Sorry. Use it here. Fibonacci retracement. Fib retracement. Okay. I know I have a lot of lines here, but 78.6% Fibonacci is what you're looking at. So just to zoom in into, let me go into 1 day, 5 minutes. So we are right at it, right? 4502 is the Fibonacci retracement of 78.6%. Now, if I go to the hourly chart, you can see I have a line there because I was trading this line right here. So I'm going to remove it now just to avoid confusion. And so now we have, well, I just erased the fib. This damn thing. I just erased the fib. See, that's why I don't erase anything. Add Fibonacci retracements back here. Okay, now I'm going to zoom in. I'm going to go into the 20-day 1 hour charts. And so anyway, you see it right here. It's 78.6% Fibonacci. And let me make sure that you guys can see it on your screen. I don't think you can see it there, so I have to move this. So right there, you're going to see it. There we go. So you're going to be able to see 78.6% Fib right up here. And you can see that we are right at it. When I go a little bit closer, 10 days, 30 minutes, you can see that we are right at the 78.6%, right? So can we get are we done at 78.6% Fibonacci, or can we get a full Fibonacci retracement all the way up to the 100%? That is a possibility that we're going to do that as well. And if we do that, we are looking at 4,600. Now, 4,600 is totally not out of the picture, in my opinion. Now, we do have a signal at 458.17. And that signal came in a few days, and so far has been playing out the same way I had a signal that showed us the way down to 410. It played out. Now, this time I want to see how that's going to play out. Let's see. Let's go to Apple. Okay. For some reason, I feel like I need this to be bigger, and because I'm doing it on YouTube, I'm not sure that it's getting. You guys, if you guys can see it fine, just let me know, right? If you guys think that it's okay to see it like that, then I'll continue like that. But if, to me, it looks a little bit far. But you guys tell me if it's okay with you. I'm gonna look at Apple right now. So we are at 190, guys. We said about a week ago that we had a signal on Apple that said that we were going to 189. I think you guys remember that. We talked about that. So that is something that if you paid attention, you would have made money on. Now, I'm going to read something here real quick. It says here, the upward momentum seen in the relief rally appears to be losing strength, as some mega caps experience outside down days recently. While we anticipate a few days of consolidation for a healthy market adjustment, we don't recommend reducing exposure because short-term upside momentum remains robust, and there is no evidence of sell signals. So yes, it still tells you, although we are extended, although it looks like we should be pulling back, it still looks like Apple can go a little bit higher. Because why not? Why can't we do a new high on Apple? Why can't we go to 200 on Apple, right? I know that the latest high was 198, but as you can see, there is some resistance here. I'm not gonna lie about that. Look, you see it right there, right? We got rejected there last time. Now let's compare. This time, right here, when we got rejected, we were with the stochastics already crossing down. So we had the stochastics already turning to the downside. And this time, we don't. This time we have the stochastics still above the blue line. It still wants to give us a little bit higher. It still can give us a little bit higher. Now, the other thing is that McClellan Oscillator is telling you, well, this market is going down. But you see how it's kind of flat. It's not really pointing down. So it can still give you a little bit more time. Honestly, I could tell you that if you look around, 2040 right here is crossed to the upside. The more likely scenario is for this market to push up higher after any pullbacks. I want to point something out as well. 2 weeks ago, or 2-3 weeks ago, all the news that you could see on Twitter was, no one wants our bonds. China is dumping our bonds. This and that. Our debt is too high. Nobody wants our debt. And now, all of a sudden, CPI came cooler than expected, and everything switched. All of a sudden, oh no, yeah, things are better. Don't worry, inflation is better. Now, this whole soft landing narrative, I still don't believe it. I still don't buy it. And why? Well, we had soft landing in 1995, but there was no yield inversion. So if you look at every other recession that we had yields inverted, and so we have a very inverted yield curve as it is right now. Now, the issue that the Fed is going to have is if the yields are dropping, and we can see the mortgage applications already increasing, and so that's going to ease financial conditions. Now, that's going to put the Fed back against the fence, because if we ease financial conditions, then people start spending more money. They look at people already applying for mortgages because they're starting to think that the rates are going to start dropping, and now it's time to start applying, right? Now, the issue here is that that's going to work against what the Fed wants. What is good for us is that there's a lag effect, and that lag effect is going to kick in at some point. I think we're starting to see it. We saw it during the CPI, and I think the next CPI you're also going to see another good number, which is gonna put the Fed away, and he's not gonna do more. He's not gonna do no more rate hikes. Um, in my opinion, the banks are not out of the woods. Um, Another thing that I want to point out is that the way the Wall Street works is, you know how when you have the banks give you these buy ratings and this and that, I would not pay too much attention to that, and in fact, none at all. Because I want to read something here. It says Goldman Sachs has unveiled its 2024 projections for the S&P 500 and the economy. The forecast predicts that the S&P 500 index will conclude 2024 at 4,700, reflecting a 5% price gain over the 12 months and a total return of 6%, inclusive of dividends. The underlying assumption of the next year is a continued modest expansion of the U.S. economy, steering clear of a recession. I call bullshit on this. Now, the forecast anticipates a 5% increase in earnings, with the equity market's valuation hovering around 18x, in close alignment with the current PE level. So, while this outlook on the economic front is relatively optimistic, it presents investors with challenging decisions. So, although Goldman's projected 6% total return for the S&P 500 falls slightly below the historical average, it remains a respectable return. However, let's go break that down, because banks give you rosy outlooks because that's their jobs. What happens if you get, I don't know, if you're an investor, you have millions of dollars and you want to give them to JP Morgan, but JP Morgan is telling you, hey, listen, things are going to be horrible. We're going to get a terrible recession, and I don't see how we get out of this. Do you think that investor is going to put money with them? They're not. They're going to go to Bank of America because they're saying that everything is great and you should put money there and you're going to make money and you're going to double it. And just like Goldman Sachs is telling you. Goldman Sachs is telling you beautiful things. They're giving you a rosy outlook. That's why buy ratings don't mean a thing. They're going to tell you, buy this company, buy that company. I invite you to go look at the companies that had a buy rating and ended up bankrupt. There's plenty. Okay. My thing is, the markets right now are front running the Fed. And because they're front running the Fed, they are expecting that we get a first cut by March. Why do I say that? Because March, so usually markets are used to the fact that the Fed cuts rates 6 to 9 months after the last rate hike. So that means he hasn't given us any more rate hikes. That means that we've been paused for a few months now. So if you calculate this and you take an average between 6 and 9, let's say 7 months, the market is calculating that the first rate cut is going to come by March. And so there's an issue with that. I don't think that's going to happen because that could re-spark inflation, and I don't think that's what the Fed wants. I'm thinking more like July, August, or somewhere around the corner, because that's when you're going to get that rate cut without actually causing more problems. Because the Fed is not going to make the cut unless he's sure that this inflation is completely gone. Now, another thing is, before I finish my rant and I go back to the charts, the reason why the Fed cuts is because something broke, and so we would have to have evidence that we have some kind of recession or something happened for the Fed to start cutting. Now, if things start coming down on their own, he's not going to cut right away. He's going to pause for longer until we start seeing signs of something breaking. Something has to break. Either it's the banks that they cannot tolerate such rate hikes, such high rates, or evidence of recession. Now, I'll give you an example. July, and this happened in July. It was June, July, August 2018. I remember the Fed was saying that he was hike, and the Fed said we are nowhere close to the neutral rate. He said that in August 2018. You guys can look it up. And then, so August, right? Then we have September, October, November, December. 4 months later, the guy says, hey, we are closer than we thought. And he started cutting rates. And he started cutting, and the market started. And then again, we went up again. So how is it that, everybody thought like, why is the Fed cutting? What broke, right? I don't understand what's breaking. And so in September 2019, we found out that it was, that reverse repo, there was a stress in the hedge market, and this is and this is why the Fed started cutting, because something had broken, something was broke. There's a lot of things that neither you or me know, but there's a few things that the Fed knows more than us, and a lot of people think that they're gonna, figure out why he's thinking and why he's doing this kind of things, and we're probably not gonna be able to figure it out. Okay, now I'm done with my rant. So let's go back to analyzing what can bring this market higher. What is it that can bring this market higher? We talked about Apple, and if I look at the three-year weekly, you can see that Apple still has room for the upside. Now, how do I know? I can grab this regression channel. I go like that, very simple, and I extend to the right. Now, if you don't have any positions and you can be open-minded, you can see that there's a chance that this Apple can push all the way up to here. Perhaps not in a straight line, but it can go all the way up there. Now, if you are on puts, you're probably not going to like that, and you're going to think, nah, that's not going to happen. Well, what I want to tell you is that on the weekly charts, you now have the stochastics cross to the upside, and we're not even at extremes, and the MACD is just turning green. So there is a chance. There's a chance that we get a little bit up higher, then pull back, confirm this middle of the channel, and I think at that time you can start pushing for the end of the year rally. I think you might see Apple end of the year rally somewhere around $212 or so. That's what it looks like. So, okay, we're gonna go. Let's go to the undefeated Nvidia. Nvidia is doing kind of the same. Look, it's already breaking out. Look, you had the 161.8% Fibonacci. This is going to be broken out. This is going to get broken. At some point, we'll pull back, maybe to the 20. I don't think we're going to get such a deep pullback, maybe more of a shallow pullback that comes back to maybe the 20, and that's why I have that red line right there, right down to here. So 432.07 or so. I'm going to now move this thing so you guys can see a little bit better. That still doesn't show the numbers, but I'm going to move this this way. Let me minimize a little bit. There we go. Still doesn't show it, huh? It's hard for me to fit it here. Anyways, I'll keep it like that so you guys can see, at least see the numbers. Okay, so so for me, same thing. Awesome oscillator on the weekly is crossed to the upside, and it looks like it's still not at extremes. Last time we dropped, we were at extremes, right up here, way up there. But this time around, we are not even at extremes. And if you look at the daily candles, you have a 2040 cross right here. 2040 just crossed. Now, I am looking for some kind of pullback in this market, and I think we're reaching exhaustion, and I think we're almost there to take a breather. Now, if we look at, let's look at the other culprits, Meta. By the way, there was an article today saying that 117% of the market push has been generated by the 7 stocks. And so whoever thinks we're in a bull market, I think is in for a surprise, but I could be totally wrong, and then we will find out soon. For Meta, same situation. Look, you had this as a resistance. It clearly broke over the resistance already, and it can go make a new high. And if you stay, again, open mind, we're going to remove that box. If you stay open-minded and you go to weekly chart and you draw something like this, you still have some room to the upside. Now, perhaps in the case of Meta, we're going to push up to the middle of the channel, which is around 350. And at 350, you can get a pullback, maybe back to the 20. And at that time, to be honest, guys, if we get this kind of pullbacks by the first week or two of December, you're going to start seeing more people buying into the end of the year rally. And there's a lot of window dressing that has to be done, and like I said, the 25% of mutual funds have to do mutual fund distributions. So whether we like it or not, or whoever is bearish on this move, I don't care if you like it or not, but the market can continue to go higher. So okay, now we're gonna go to Netflix as an example. Huge push on Netflix. You guys can see here, 10 days, huge push. It's been pushing from 417 all the way up to 467. It's been ripping up higher. Now we go to the yearly. On the yearly, I had these two lines right here, right? This one right here and this one right here. My view is that we go to the top line right there, and I think at that time we start looking for a pullback. I think we're gonna get this pullback. Maybe by next week we start descending, and maybe as a surprise, if he burns all those 50 millions that are expiring tomorrow, maybe as a surprise we begin the descent tomorrow. But so just be aware that we are reaching extremes on multiple stocks, so it would make total sense. And I would not be surprised that if we do one more push, we start heading back. I don't think the pullback is going to be very significant, but on Netflix, if you pull back from 464 down to 427, it's a nice pullback there. So, and let's look at, for example, let's look at Tesla. I'm going to talk about Tesla at the end, but Tesla is not part of this 7. And honestly, Tesla does whatever he wants. It always does whatever the hell he wants to. So we're going to go back to now. Other things like semiconductors, other semiconductors are doing the same exact thing. Look, we have a high of 132 on AMD, and we are right now at $120, right? We're not very far from the top. So, and also want to point out that we just crossed 2040. Again, 2040 just crossed here, and it looks like stochastics still not heading down. We don't even see weakness on the MACD. We don't see any kind of weakness right now. If you look at other semiconductors, like for example Qualcomm is also reaching a top. So if you start looking at like for example Marvell, they all kind of look the same. You also, if you look at Intel, for example, INTC is ripping up higher. INTC was a hell of a buy down there at we talked about it multiple times when it was down here at 20 something dollars. Nobody wants things when they're low, they want things when they're high. So just to make it obvious, we had this regression channel here, this green regression channel. Once you break that, it is likely that if you come back one more time to retest, you're gonna leave from there. If INTC ends up breaking above the 200 moving average, you're gonna see it go break out into new highs, and it's kind of similar to what we saw with Tesla back in the day, which I will show later. But again, so what I want to point out that once you have this breakage of the regression channel, you also have the 2040 crossing, which is pretty much leaving you at this point. So INTC, nobody wanted it. To say, it's old, whatever. I want Nvidia. And this was the best entry right here at 24.73. So you went up to the channel, you got rejected, you came back again, you broke it, you confirmed it, and you left. And now it's leaving you. Okay, so I want to talk about Google. Google was a tremendous buy. Now Google here, this was my target right here for Google. I'm not sure if he can reach all the way over there during this, but I think he can reach there during the end of the year rally. So once we get this end of the year rally going, I think you're going to be able to see Google pushing up all the way to the middle of the channel, and that's going to be around 150 or so. And I have two lines that confirm that, right? If I look at the weekly, I have the green line that comes over here, that it takes these bars as a support. It uses all these bars as a resistance, and it's now likely going to go up there to the green line, and the green line intersects with the top of the purple channel, which that's why I drew that circle there. I think we're going there. I think Google is going to 147, 150, I want to call it, even 147, 148, around there. So everything seems to have more room to the upside. Just preparing. This is just, everything seems to be preparing for the end of the year push. Amazon. Amazon is another one. We talked ad nausea about Amazon when it was about $80, $90. How come nobody was buying it since everything was rallying? How come not Amazon? How come nobody wanted Amazon? And everybody's answer was like, no, it's too high now. It's too high. It just left us. Well, it didn't. Now it's gone. So if you enter an Amazon here, you're entering at the top, and you're not doing, you're not entering very well here. If you're trying to enter and you think that the markets are definitely going to leave you, you would want to wait for a pullback. And a pullback at least to 120, 122, that's a good entrance. At least you're entering. But other than that, I'm looking for more of a pullback when the Fed actually cuts rates and these markets actually realize that things are not as rosy as they look. And that's when I will get my buying opportunity. If it doesn't come, then I'm ready to pay the price or to trade other things, right? I'm going to find other things that are down there. I always do. So I don't have to rush into getting, I don't want to marry any stock here. So something I want to point out on Amazon, if you look at the yearly, you have, or the daily candles, I should say, you hit a high of 147.29, and from here you can get a little bit, one more push from this purple line. So if we get to 136 and change, and they get ready for it to make a new high on Amazon, I cannot give you what the next high is going to be, honestly. Probably go back to, as a crazy thing, it can shoot up all the way up here 167. It's possible, right, for the end of the year or so, to rip up all the way up to 165, 166. It could definitely happen. We talked about Meta, we talked about Amazon, we talked about Google, we talked about Apple. Let's talk about Tesla. I know you guys like to trade Tesla, but in my opinion, Tesla is still, and although it's been pulling back, and people are like, oh my God, Tesla's gonna get destroyed. I don't think that's the case. To be honest, when you look at the bigger picture, you had this channel right here, this regression channel. You were trending down, you were trending down, you were trending down, and you broke above it, and you're not trending down anymore. What you're doing is you're confirming this purple line. In fact, I don't see how that's scary for people, but 2040 hasn't even crossed there, right? Perhaps on the daily it has to cross. I haven't looked. We're gonna find out right now. But so far you have support at the 200 moving average, and you have support by this purple line, which is the same support that you bounced from last time right here. So let's look at the daily candles. In fact, I'll tell you what, this stochastics looks like it's about to cross to the upside right there. And this right here is not very convincing. So let's go to the daily candles. On the daily candles, I'll recross. In fact, we've been crossed. This is how the 2040 works, and that's what I like it a lot. The 2040 cross right here on October 19, and since then we pushed back down. It continued to follow the 2040 cross, and here we had a buy signal that failed because it came back to the purple line and failed one more time. Probably to shake off some more buyers, and here it gave you another buy signal, and this one played out. This one played out because this one came accompanied by a stochastics cross down here. So that's what caused the market to actually, the actual stock, in this case Tesla, to push upwards. Now I tell you what, I don't know how you can get bearish on the stocks just now if you see that the 2040 was heading down and now it's flattening and now it's pointing higher. In fact, it looks like if you break 50 moving average one more time, you're going to remount that channel, and then you're going to start moving up higher. If there is an end of the year rally, which I think there will be one, you're going to see Tesla pushing with it. You think Tesla is going to be left behind with the rally? I don't think so. Okay. So to wrap this, we're going to go to the VIX. You guys could post any questions there if you feel like it, or let me know if this worked out for you. Give it a like or something. Maybe I'll become famous someday. But if you guys are not following, maybe get a follow, maybe get a like, put a comment there if you like this or you prefer the other one, or what was clear. I don't know. I find like the audio here is much better, but you guys will let me know. So okay, so for me, the VIX. Okay, so we're looking at the VIX, and although people expect the VIX to start ripping higher from here, there is this line right here that I made the other day, and now I'm going to remove it because it looks like we went down below it. There is a chance that we do one more pullback just down here. I'm looking for that 12.77. So I know people are like, majority of people are tired of this bullish push because nobody's in it. Nobody's in it because the market maker continues to go higher because he doesn't have anybody up there to pay for. So whoever was on calls, they closed early because they thought that we were going to melt. They wanted to lock in profits. And whoever wants to enter options, they don't want to enter calls because they know that the upside is now running low. So what do? They enter puts, and because they enter puts, they add more fuel to the fire, and market maker can continue to go a bit higher until he burns all the bears and all the shorts start closing. Now, everybody's expecting that tomorrow, all of a sudden, we just push back up to the 20 or something like that. I'm not discarding it, but I would keep my eye on it. My view is that we could do one more pullback here, just one more to down to 12.77 on the VIX, and at that time I think you start the bearish momentum. You have a cross, it's trying to cross here on the on stochastics, and it's not past this blue line just yet, so it's a little bit early to call it. But if we do one more pullback, you're gonna see that push in the market that I'm looking for. I'm only looking for it for many reasons, one of them being the fact that nobody's expecting it. Nobody thinks that it's possible. Everybody thinks that we're done. And so we did have a fill candle there that was not respected. And we're going to look at 10-day. Let me look at 20-day 1 hour. 20-day 1 hour. I'm sorry, too many lines there. I know it's annoying. Let's use the NASDAQ. I don't have the white lines there. So if you use the NDX, and you can see if you create a channel here, we've been pushing on this channel for the past 20 days. So 2040 is wide open to the upside. And like I said, we are not even at extremes on the stochastics. Okay, so if we look at the SPX, kind of same situation. I grab a channel, put it right here. Still bullish, right? Nothing so far is telling us that we are about to head down. Stochastics, look, the stochastics in fact looks like it's going a little bit higher, and until we get these two crossing again and stuff like that, they'll start heading down. You can see that. I like to look at the stochastics more on the daily because you can start seeing. So over here they are at extreme, so I'm looking for them to roll over. I just think we probably have maybe one more session. Maybe tomorrow, maybe we start heading down on Monday or Tuesday. I would not be surprised. We're reaching extremes. We're not at extremes, but we are reaching extremes. So last time we pulled back is all the way up here, right? All the way up here on the awesome oscillator. And you can see we're not there yet, right? So that's my opinion. I think that when we pull back, we go back to right here. Go back to the white green line, which in fact is going to match with this channel right here. Look how things work out. So I'm going to now move this. This was my initial target all the way from 410 to here. And that actually overthrew it. And this was my entry right there. I enter at the very, 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 very bottom. And now I'm telling you that we have a 2040 cross. And I'm telling you that I'm looking for a pullback, a small pullback down to this. And if we touch that bottom of the channel, I think if that happens by December 1st or 2nd week, I think that that's going to be done, and that we're going to start pushing into a end of the year rally. If we get a deeper pullback can come all the way down to the blue line, which happens to be right by the 20 moving average, and overshoot it, get some people to buy puts, remount the green line and start heading higher, and go higher as much as, go high very fast, just like we did here. Or as a crazy thing, which I would prefer, to be honest, it's a nasty pullback here all the way down to 200 moving average. And if that happens, you're going to see more people getting bearish right here. You drop everybody here, do it very fast. I think the next drop is going to come very fast. If it's going to be a deeper pullback, it's going to be coming faster. And once you guys see the dark pool supports, probably ignore those, because at that point I think the market's not going to stop there. We're just going to slice right through them. So if we end up coming back all the way down to the 200 moving average, that would be awesome. If we can get there, you're going to see a lot of bullish momentum there, a lot of bullish momentum, and then we get the end of the year rally. I don't think we get that deep, but I would like that. But I think it's going to be a short pullback right here to that pink circle. I was looking also at the Dow Jones. If you look at the Dow Jones, we are also in an uptrend channel. Look, I have a buy signal here and had a buy signal here. These have been playing out. Here was a buy opportunity. Here was a buy opportunity, and we are pushing. Now, the pullback can come as low as in between the green line and the yellow line, and that could be the pullback right there. So perhaps we're going to get a shallow pullback everywhere, and go ahead and prepare for the end of the year rally, somewhere around there. If we get a deeper pullback, it goes down to the 150 moving average, which is pretty much together with the 20. I want to point something out, guys. We are getting Dow Jones cross 2040, Qs 2040, SPY 2040, and IWM is the one lagging behind, and today we broke this channel. For the past few sessions, I said, if I extend this to the right, for the past few sessions, IWM has been in a downtrend. This is now changing. Now we are into a new bullish channel, which is this green channel. And so we hit the top, and that's why I said yesterday, I think the IWM is going to pull back, because we hit the top of the channel, and it did pull back. Now the question is it going to bounce one more time here, retest the 200 moving average and this dark pool at 180, or is it going to come back down all the way down here and then push up? Either way, I'm looking for it looks bullish everywhere for the end of the year, and because of seasonality, it would make total sense. Okay, I think we covered pretty much everything. I want to cover one more thing, which is the ZN. This is going to be the 10-year treasury. Okay, 10-year treasury yield, 10-year treasury notes. So I want to point this out. On the yearly, I want to focus here. You guys see we had a 2040 cross right here, right? This is important, guys. 523, 2023. We had a cross to the downside, 2040 below, right? We've been trending below that. Now I gotta tell you that we are getting a 20, 40, 50 very close kiss. And if this ends up crossing to the upside, we are going to get a push on the bonds and a push on the markets. The 10-year treasury note is going to, now remember, when the yields start on inverting, this starts heading higher. Now if you look at the weekly charts don't give you that just yet. So it's maybe it's too early to celebrate that we're out of the woods, but it's definitely at least the beginning of it. Now what I think is that once you get this weekly cross of the 50 moving average right here, that's when things really start turning. But you got to break that 50 to be able to start hitting higher. Whenever that comes, that's when you'll know. Now I have one more, ZB. That's going to be the 30-year treasuries. As you guys know what I trade, and you knew I was going to go there anyway. But the ZB here, I have it in a channel. And so this channel right now, which I'm going to change to green for luck, for St. Patty's, that channel is so far so far it's working out. And when I look at the awesome oscillator on the weekly, guys, on the weekly, this is big. Awesome oscillator, green, second green bar, and we see the stochastics pushing out from the blue line here and is pushing to the upside. You guys can see we haven't had that. We haven't had that in a while. Look, let me zoom out. Look, we had a pull back here, and then we ended up making this push, right? And we've been consolidating here, consolidating. We had a nice uptrend line here, which failed. And this line I'm not going to erase because I have a feeling that that line is going to act as a resistance in the future. And I think that's where we're going. I think that's exactly where we're going. So I think we're going to start grinding here. Probably get rejected at the 20, come back a little bit lower, come back to 40 or so, test the 50 or so. But this is my point where I think we're going to go. So we are very close to it. I drew that a while ago. And if I look at the daily candles, it looks like that. On the daily candles, it looks bullish. And 2040, just like the ZN, just like the 10-year treasury note, is about to cross. It hasn't crossed yet, but if it crosses, you're going to see a nice push up here. My first red line right there. Then it come back to the middle channel or bottom channel. Do one more push to the middle, come back, this and that, and eventually we'll land there. I drew that circle there because I think that by the time that we reach around December 15th or so, we are going to have, this is what, December 15th, we are going to have the 150, 200, somewhere around here, and we'll hit that and probably act as a resistance, and that's when the year ends. And I cannot tell you what 2024 is going to bring. Nobody knows. I think we play what we have in front of us, and we'll figure out the rest. You know, whatever comes for 2024, we'll see. But for now, this is what I'm seeing. This is what I'm playing, and that's it for me, guys. For those that are looking at things like BABA, things like that, I do not recommend it right now. I know it's been consolidating. I know it was in an area where you usually buy it at 79. It's a buy usually, but not the way China is looking and all of that. So I'm gonna stay away from it for now. If it ends up breaking this channel or breaking above the 150, it's probably going to be a buy, but you can also get a nice pullback here, middle of the channel at around that's very low. That's very low. Crazy that it can get down there, but I would think more like $50-$60. But as a crazy thing, if things get bad, this thing can go to the middle of the channel, which is at $20. So I don't think you want to be invested on something like that. One last one, Home Depot. I like to trade this one. It's always a buy at the white line, and if you look at the daily candles at the white line, it overshot it, and then it gave you a buy signal right here. So that buy signal played out. Once again, stochastics cross. You got the reversal of the awesome oscillator, gave you a buy signal here, pushed up, 40 rejection, came back down, tried to go back to touch that 282.12, and ended up pushing higher in a gap up form. I think that is going to pull back a little bit, back to the 50, and maybe even lower. If it goes back to 282 or so before the end of the year, I would be buying a bull spread. All right, guys. I think that's it for now. You guys have a good night, and let me know later if you like this, if it works well in YouTube, and if not, if we should continue to do them here or do them in Discord. All right, you guys enjoy your night and share this to the mate.